Well, global equities continue to work as we're seeing rotation really being a dominant thematic behind the scene. We've got the US dollar consolidating at the lowest level since June 2022 as the Aussie dollar outperforms significantly here. We've got commodity markets taking a bit of a breather with China being offline. But next week is an absolute behemoth. I've never seen a week like this for a long time. We've got so many landmines and catalysts to drive markets. We cover all these factors and more in the trade-off. Well, hello, it's Chris Weston here, Head of Research at Pepperstone. I'm going to be joined in 2 seconds by Blake Morrow from Forex Analytics. And we're going to be slicing and dicing all the news, the views, and all the setups that are coming through our world. We've also got a special guest, Crosby from TradingView, General Manager there. Really exciting announcements and updates from Piers. But we're going to be covering all the markets. I think I want to bring Blake straight into the programme. Blake, how are you doing, me old mucker?
I'm doing great, Chris. Good to see you, buddy.
You too, mate. I want to give a shout out to Mikey Brown and also your boy, Ryan Littleston, who's just come out with the first Trade-Off UK. For all those people out there who haven't seen it, go into the YouTube channel and you can see that. You'll probably see it streaming in TradingView as well in streams. Great effort from the guys. Obviously not quite as good as us, Blake. I mean, we're seasoned pros at doing this now, but everyone should watch it. Different perspective, different thematics about how they're watching things. So go and check that one out as well. And I want to just also sort of say thank you to everyone out there who condemned me, to mock me, abuse me about my funky haircut. I'm 43 years old. I tried something, I failed. But as we know, Blake, in life, if you do something, you've got to cut it. It's like, you're trading. If something's not working, you cut it. I've gone back to the old style. So I hope you're all happy about how that's all gone down. I've learned a lesson. I won't try these things again. I won't try and be 24 years old going forward. So, and you're
24. Mohawks over the age of 15 is a no-go for you.
No,
Chris,
I know. It's like skating, isn't it? It's like no one should be skating over the age of 35, I suppose. Anyway, with all that in mind, let's go straight to topical thunder. Yeah, Blake, I mean, I think after market, we're just seeing a little bit of sellers coming through in NASDAQ futures. We've just seen Microsoft's numbers coming out. I mean, I think when we saw them actual numbers coming out, they were pretty good. The stock rallied, but now I think we're seeing it lower in the aftermarket. That's taking NASDAQ futures a little bit lower. But I think it's interesting. You have seen such a big performance this year from global equity markets. I mean, we've got the Hang Seng before it closed up 11%. Yeah, the NASDAQ's really been leading it in the US, up 8.3%. You've got the Euro stocks really killing it in Euro terms. Obviously, that's up nearly 10% as well. If we go and take the US equity markets, it's really been this kind of bubbling rotation that's really been the focus point for me. And that's where you've seen, short interest as a basket up about 31% this year. So short interest stocks have been killing it with sort of a realised volatility of about 70%. High beta stocks have done really well. You've seen momentum stocks not doing so great, but it's really been junk that's worked, and cyclicals to an extent as well have worked with the reopening. But where are we now? Everyone's talked about the S&P breaking through the January 22 downtrend. We've got a whole raft of earnings that are coming through this week and next week as well. Where do you stand on the equity trade?
Well, I guess the question is where are we trading? Where's the S&P trading? Times earnings. What are we around 18 times earnings? Yeah. 18. Do you think that is a good value based on the current environment facing probably what could end up being one of the longer recessions that we have to live with globally? I just don't see the value right now. Now, does that mean you need to fight the tape? I know traders that do it every day. And it's not really my cup of tea right at this moment in time, but I sure as hell don't want to be chasing the market up here, Chris. But that's me. That's my opinion. But I've looked at all the technical breakouts. I'm looking at the S&P. We've been pointing out the down descending channel in the S&P for all of last year, all of 2022. Are we peeking our head above that right now? We are, but I'm not really sure if I've got the stomach to really chase markets at this point.
Well, I'll tell you here that we've got you bring up the valuation. I mean, we don't trade off valuation, but we react to people who are, right? The price will move based on what their flows are doing. 18 times, it's not that punchy. It's below the long-term average, but you're getting 18 times for basically zero earnings growth, and that changes things. The equity risk premium needs to go higher, and I think so that changes things. If you were to trade this at 20 times, I think that the market is a screaming sell. Do we get that? Do we get up to those levels where price expansion gets us a 20 multiple? I'm not so sure we do, but let's bear in mind, this week we've got IBM, we've got Tesla coming out. Tesla's implied volatility for earnings this week is 11% on the day of reporting. We've got Intel coming out next week. You can talk about Apple, Amazon, Alphabet, McDonald's. All these names are coming through, and at a time we've obviously got this huge rent risk that we're going to talk about. So, this market could be trading up to 20 times by the end of next week. Who knows? Or we could be down significantly. So I think buying volatility probably makes a bit of sense here.
But one of the things, and we're going to go right into earnings, Chris, and because I want to kind of lay out some of the companies that I think that we should be focused on this next week, because we are going into earnings season. And as we're talking about 18 times earnings, is it a value play? One of the things that I learned early on in my trading career, and this is one of the things that it's always stuck with me because I am a product of trading the .com era in the late 90s, is valuations. And when, I look at, and it's not so much even valuations where we're at right now, but it's what am I paying up for relative to where it was even last week or 2 weeks or a month ago? If you're buying XYZ today at 100, but 2 weeks ago it was 80, are you the smart money or the dumb money? So, those are the types of things that I think about now. And that's, based on the conversation we were just having. But let's talk a little bit about earnings, because you pointed out Tesla. Tesla is tomorrow, and the expected volatility is insane.
11%, but we have IBM. 11%.
Yeah, IBM. We have Boeing. We have LVMH, which I think is I think that's actually a really important stock to listen to, or to watch, just because, that's all the high end Louis Vuitton and all the high end consumer stuff.
Mrs. Morrow's favorite stock, eh?
No, I was going to say is Mrs. Westy's favorite store. Yeah. But next week we got Facebook, we got Apple, we got Google, we got Amazon, then we got the Fed, then we got, we have all sorts of things. NFP, we have all sorts of things
crazy.
happening next week. So we're going into a really, really treacherous time with markets that I feel might be a little maybe on the high side valuation wise. But what are you looking for next week, especially with these earnings, especially estimates? I
mean, it'd be nice if every company beat expectations or missed expectations, so the market actually trended. But obviously that's not going to happen, or it's very unlikely to happen. So you could get a situation where Apple comes out with fantastic earnings, but at the same time, Amazon comes out with poor earnings, and it sort of nets each other off. But let's go through some of the numbers here. So Meta's the stock that everyone loves at the moment. It had a shocker last year, but it's been trending beautifully. The implied volatility in Meta is the expectations of 11% move, similar to Tesla, on the day of earnings. So if you're holding Meta, if you're trading Meta, you're expecting big moves. That's the way it is. I mean, you could sell Vol on the back of that, but Meta's expected to move. Intel, you're looking about an 8% move. IBM this week, 6%. Tesla, we talked about 10.7%. But Apple's the one, that is showing some signs of leadership, and the market's expecting about a 5% move there. So look, obviously with the Fed meeting coming out, with the ECB, the Bank of England, payrolls at the end of the week, it's kind of all these different offsetting factors. You'd like to all just sort of trend in one direction. But I think we just need to stay nimble, be in front of the screens, obviously look at your position sizing, look at your leverage. I think that's where we need to be. So it's one where you've got to be in front of your screens and the ability to be able to react is absolutely key here.
Yeah, I agree.
There we go. Okay, so we mentioned it there, central banks. We've gone down to central banks. So, within that 24-hour period, the Fed kickoff, we're going to be doing next week's trade-off 5 hours after the Fed meeting. So we'd have a chance to look at and digest the statement and the actions that are taking place and market reactions there. Shortly after that, 15 hours or so after that, we've got the ECB or the Bank of England meeting, and then shortly after that, the ECB meeting. You talk about the payrolls at the end of the week as well. But just going into the Fed meeting, got the ISM manufacturing and also the JOLTS report as well. So again, you can just add them to the list of landmines to navigate through. Obviously, the Fed meeting for me is the thing that sort of encapsulates all markets because it's the closest proximity to the dollar, and everything sort of keys around that. But markets expecting 25 basis points. That's a lock on. I can't see them doing anything else. The market's firmly pricing that, but then it's going to be about what's priced out the rates curve. So given positioning with the dollar, I think the market's obviously pretty short dollars. Yeah, how are you seeing the Fed meeting, and is that the sort of primary central bank meeting you're going to be watching, or have you got your eyes more closely on the Bank of England or the ECB?
Well, first of all, it's a great question. Good news is that we have to deal with the FOMC first. And I agree with you as far as the quarter basis point. But what, most traders are really focused on is the fact that the Fed is going to be leveling off and finding that terminal rate and then possibly pricing in rate cuts. And that's, we're going to get into all that here in just a few minutes. So make sure you guys stick around. But the fact of the matter is that we have the FOMC first. They are going to show leadership. Then we go to the ECB and the Bank of England, and I'm going to be keeping an eye mostly on the ECB because it seems like they're hell bent, or at least Christine Lagarde is, to raise rates at least twice, another 0.5% and 0.5%. And with that being said, I don't know if the Bank of England's got the stomach to do the same thing. And I wonder, and this is a big question that I've had, and I actually talked to your colleague Michael Brown about this earlier today, was will these European central banks, the ECB and the Bank of England and other central banks as well, are they going to be any influenced by the Fed, especially if the Fed is really going to press pause on the rate hike campaigns, and we walk away feeling that way? Is it going to take a little bit of pressure off of them?
I don't believe that.
I don't think it will, at least not for the ECB, but will it for the Bank of England? And that's the question that I have. And make sure you guys stick around, because one of my plays today is going to be regarding the ECB. Yeah. But Chris, what do you think?
Yeah, I think a 50 basis point hike from the ECB is a lock on, as I think it is with the Bank of England, to be fair. Although there are a few economists who are calling for 25 basis points. It sounds like you're seeing a higher probability than I, which probably opens up some pound downside. You'd be looking to trade it against the crosses if you thought that they were going to go 25 basis points. But I think they'll go 50. I think the ECB go 50. But I think you're looking at a central bank that still has more work to do than other central banks. It's probably the ECB here. And I think the other one is also, what are they going to give a lot more announcements around their quantitative tightening program? The market wants some clarity or further clarity around that. And so I think there's going to be, it's not just about interest rates and the hikes and what their statement relative to what's priced in at the curve, but there's other factors with the ECB, such as, understanding that quantitative tightening timetable. So, it could be a big one. But I think in terms of market pricing around rates for all three central banks, they pretty much nailed it to the T. So you shouldn't, in theory, all things being equal, get a reaction from the rate hikes from banks. It's fully priced. So
should be priced in. But you know what? Here's the thing. We're going to be chock full of volatility with all this central bank activity. And I'm glad you guys and gals are sitting here with us here at the Trade Off as we break it all down. But let's shift into our last segment, Chris. And I want to talk a little bit about sentiment, because, I take a step back and I know I'm not the only one. I look at the markets and I'm like, what is everybody thinking right now? And is the market playing chicken? And I know it's, that's a terminology that people have been using a lot, and it's probably way worn out at this point. But the market seems like it just doesn't believe the Fed governors, and nor other central banks for that matter. Financial conditions continue to loosen, Chris. We got markets ripping. You got cryptos that are flying. What the hell's going on? Why are they ignoring central banks right now, and why? What are your thoughts?
Well, I'm going to go into a chart in a second on rates, because I think it's a really interesting one, and it needs to be explored. But central banks are banging a drum. The markets are pricing a different distribution, or they're expressing it in rates as a way of expressing that probability, which as I say, we'll talk about in a second. But I think in terms of sentiment, the equity markets, certainly the US, have been buoyed up by rotation. So you've seen short interest working really well. Cyclicals have been buoyed up by what's been happening in China, the reopening there. Growth stocks are now taken over. And if bond yields were to fall on a real basis and a nominal basis, then I expect tech to continue to work. And I've got a trade on the back of that as well. Obviously, earnings are there. But I mean, if I look at sentiment now, if you have a look at hedging activity on skew, for example, normalized skew in the options market, that's come right down. So people have been taking those puts off the table. You've seen that in the put call ratio. That's come right back down. So hedges have been unwound. You look at the VIX in itself, we're trading sub 20%. So I think if I look at sort of the classic sentiment indicators around hedging, they've been reduced. So markets are sort of pretty free to move around, and we've seen a lot of junk working quite well. So I think this is a market that is looking pretty good. I think sentiment's pretty hot. Aussie dollar's been the best performing currency this year, followed by the Kiwi. The question is has it got too hot? Are we due for some for a bit of a rollover? Now, I got this wrong last week. I suspected there was going to be some further downside after we saw that really poor retail sales number. Equity markets were coming off that downtrend, and we looked at Aussie Swiss as a trade, which worked really poorly, to be fair. But markets have rebounded, and they've called a lot, including myself, offside there. So, but I think sentiment's been pretty hot. The question is can it last? Can it continue to push through? So that's where we are, I think.
Yeah, I'm the same way. I mean, I was with you playing the dollar mex to the long side. Even though we got a spike back above 19, it just quickly dissipated, and that bullishness dissipated as equities continue to rally. So I'm with you, Chris. Maybe we were just a week early in this case study that we're doing with the markets. But I'll tell you what, sentiment I believe is a little stretched here, and I think the market's going to have a bit of dose of reality as we. Well,
you brought up a really good point, and that's the financial conditions index, and that in my opinion, that is something that a lot of people need to understand. Is that the market's pricing of inflation expectations throughout this year is that it's going to dissipate and come down sharply. The financial conditions easing could change that situation, and that could be very problematic towards the end of the year or midway through the year. So, that's not going to sit well with central banks. This idea that the inflation's heading in the right direction, but financial conditions could derail that progress they're making. So when does that snap? When do they come back and hit this one? So definitely one to consider there. Anyway, let's go to that's a setup and see some of the charts on Mind. Well, I want to bring up the rates pricing. I mentioned it in the earlier synopsis. What I've got is here is a TradingView chart. I've split the screens. Obviously, one of the great things about TradingView is you can do those split screens. Now, the top one, what I've done is I've used euro dollar futures. A lot of people now we use SOFR futures, but I've used euro dollar futures here. So you can trade these markets. You can trade these to understand rates expectations. Regular viewers also know that I regularly roll out this. And what I've done is effectively. You can see in the top left-hand corner the code for you to plug this into TradingView yourself. But what I've looked at is the rates differential, the yield differential between the euro-dollar June 2023 contract and December contract at the top. So really what we're looking at is the extent of rate hikes or rate cuts in this case that are priced in for the second half of this year. What we've used on the bottom one is the euro-dollar futures contract for December to December 24. Again, this just looks at the level of rate cuts that are being priced into this interest rate market. It's not my view. This is actually a product that you can trade to express a view. We call these calendar spreads, really. So what we're looking at in the top one is we can see 46 basis points of cuts being priced into the second half of this year, and we can see nearly 150 basis points of cuts being priced in for next year. So Blake, with that in mind, we talked about it there. The markets just are seeing rate cuts coming through. They just don't want to be moved away from that, even though central banks are saying we're going to be up there for longer, higher for longer. In my opinion, to get these rate cuts, it's going to need to see a sharpening of financial conditions. We're going to need to see economics really coming under pressure and equity markets rolling over. So what they're pricing here is pretty dark. If we are to get these pricing, it's not going to come at the moment. We need to see something really bad, right?
Yes, Chris, thank you for bringing up this chart. And by the way, that lower panel does not look like the euro US dollar. I'm just kidding. Everybody, euro dollar futures, completely different product. But yeah, that's the thing that's scary. And it's like, why is the market ignoring this, Chris? And it is a bit of a scary look that you bring up.
Well, I'm glad you bring it up
as a setup. Yeah.
They priced in a scenario. Anyway, maybe they've hedged the downside through rates. But, do we get 50 basis points of cuts this year? It doesn't feel like to me. Maybe there's a trade in there. But I think they're hedging themselves against the rollover. You can buy equity and hedge yourself in the rates market effectively. That's how I think maybe we're seeing things.
Peacock. All right. Well, hey, you know what, Chris? I'm gonna turn your attention over to the Kawedgie. Come on, man. You know, mate, I know I got a lot of slack for the
You come out with a chicken noise and you come out with a Kawedgie, like, yeah. What's going on there?
So, you know, this is actually a 4-hour chart. Typically, throughout the trading day, I tend to look at 4-hour charts versus a daily chart anyway. But I want to give you a little bit of a condensed view of a wedge that was setting up. It's actually a bullish wedge when you have consistent highs and higher lows. That means there's a higher probability of it breaking higher. But that doesn't mean that it can't break lower. Matter of fact, as we are speaking, post New Zealand inflation data that just came out, it's trading a little lower, right at trendline support, right at that support level at this moment as I speak.
Right.
And you know, that doesn't mean it's necessarily going to break down, but it's a setup. So if we break down, you know, do we head back down towards 62 cents? I think that is a risk. If we do break out, you know, we're probably going to be looking at 66 cents. And it's going to follow risk. And with all these earnings that are happening over the next couple of days, if you're a non-believer like me, I might actually be betting against that Kawedgie, and that would be lower. What are your thoughts here?
Yeah, well, the inflation number came out at 7.2% on the headline, and we're trading lower. And I think maybe the sort of the pullback that we've been seeing in NASDAQ futures in the aftermarket is perhaps weighing on some of these high beta risk currencies like the Aussie and the Kiwi. But yeah, I mean, this is the thing with trading, isn't it? Like, you can have these setups on there, you can have your alerts, you can wait for it to complete. Let the market push you into a trade. Patience is your best friend in trading. When the setup is complete, you have a higher conviction, a higher probability of a better outcome. So yeah, I mean, you bring up a chart, that's a setup. This is a setup. Wait for the completion. Let the market reveal its hand. This is what patience and this is what trading's all about, for my opinion. If you're trading on these slightly longer term time frames, but you can adopt the same principle in a shorter term one. So yeah, for me, this is great. It's a great chart. Yeah, which way does it go? We don't know yet, but does it matter? Doesn't matter. Respect which way it goes, though. That's my view on this situation. So, yeah, cracking chart. Bit of divergence on there, you can see. My RSI made a higher high, price made a higher high, but the RSI made a lower low. So maybe that's what we're seeing. Maybe that divergence is playing out. Maybe those risks are skewed to the downside. We'll have to see what happens there. Anyway, do you know what, Blake? With that awful chicken noise and that terrible title, I'm going to give you a red or a yellow card, should we say. You're in the sim bin for 5 minutes. I'm going to bring in Piers Crosby from TradingView, and I want to talk to him a little bit about what's going on in his world at the moment. Welcome, Piers. How are you going?
Doing well, mate, and thanks for having me. I mean, obviously, I didn't expect to start this conversation with the chicken noise, but that's obviously a great intro. So great to have you, and thanks for having me.
That's good, mate. It's good. Anyway, let's talk about what's going on in TradingView. You know, I just want to, before we go into some of the statistics and the growth numbers and some of these staggering numbers that we've been seeing, let's talk about markets. Yeah, it's been an interesting 2023 so far. The dollar's down against all currencies bar the NOK. You've got, the markets were expected to see a recession in the US in the first half. Those recession calls have been pushed back into the second half. Equity markets are loving that, with the reopening of China helping as well. What we call the NASDAQ up nearly 9%. Junk stocks are working well. Short interest stocks are working well. What are you seeing from trader activity? Different across asset class in FX, stocks. What's the sort of flows? How are traders trading the markets at the moment from your platform?
Yeah, so I mean, of course, there's a ton of variation, right? And one thing that is definitely interesting to see on TradingView is obviously, a lot of people getting very aggravated on either sides of the market. So in very dull times, if you will, there's a lot of kind of complacency where everybody's kind of buying one side of the trade or selling one side of the trade. But in terms of the last few months, we've seen much more heated conversation. And that also has to do with people having, massive downtrends in their portfolio and wanting to, really, kind of buy it all back or get it all back in that next trade. So the divergence, I think, of conversation that we've seen is actually pretty compelling and actually does lay very well into your story, specifically about, kind of the rollover of the US dollar in combination with an increase in rates, in combination with a very, very sketchy earnings season. I don't think anybody's very, very confident about the numbers that we expect to get. And I heard you guys talking earlier about Microsoft. Interestingly enough, I mean, they've grown, but, they've really slowed to kind of a snail pace of growth. And there's a big question, I think, on everybody's mind is, with these kind of growth rates kind of slowing down substantially, are we thinking, a lot of the NASDAQ is kind of becoming more of a value play rather than a growth play. And so there's a ton of conversation around that recently on TradingView as well. Yeah. All in all, I will say the overall market is very much sketchy at best. And definitely nobody's, all in the kind of literal sense, but also in the metaphorical sense, just due to a lot of the headwinds I think we have coming up.
Cool. I want to bring up something that's really exciting for us and for our clients as well. I mean, we've just seen the TradingView Trader, the broker awards. Obviously with Pepperstone, we've partnering up with TradingView for over a year now. We've been rolling this out for clients to be able to express a view, be able to research and be part of the community and execute and monitor their trades, both desktop and mobile. And it's been huge take up from clients as well. But we've just won the Best Broker Award. Now, talk us through that. The people have spoken. What exactly did they see?
Well, people's choice is slightly different. We have a couple of awards, but you guys won Best Overall. So overall, that literally means, we monitor everything from the quality of your technology to the customer reviews to the amount of engagement that you guys are actually putting in on the platform, all in combination. So in some small way, this show does its part, right? As it contributes to the overall success of a given broker on TradingView. But to win Best Broker Overall really signifies, broadly speaking, kind of the uptake and interest in Pepperstone across TradingView on a global basis. And that is really kind of bar none, incomparable to anybody else we saw this year. Wow. Now, obviously, a bunch of brokers may have built a previous business in prior years. And that's because, maybe they were established players and they, quickly rolled into the market. But the ability for you guys to get up and running and really hit this thing full speed has been pretty much the biggest separator between you guys and anybody else in the market. And it shows. The numbers really prove itself. The traders have spoken. And I mean, ultimately what you can see is a ton of chatter, not just around markets and, FX and futures and CFDs, but also, broadly speaking, I mean, people are talking about Pepperstone, which is obviously a good thing on TradingView. In general, it's pretty exciting. We haven't seen this kind of acceleration curve from an adoption standpoint for any other broker that we've had so far. And so it does really play true to your guys' growth strategy and ultimately people choosing Pepperstone.
Yeah, well, kudos to the tech guys who've helped implement them on both sides of the TradingView and Pepperstone equation as well. And those numbers are increasing every day in terms of the people who are placing trades and monitoring using TradingView. Let's go to actually TradingView itself. So, you've seen user growth up 35% year on year. You've got over 33 million. Staggering numbers, 33 million users on a monthly basis who have accounts and are using TradingView. And those numbers are going to increase, in my opinion. Things like this, strength begets strength, and you get those kind of momentum. You cannibalize the whole space, I think, more than anything else. So, going into the 2023 awards, what do brokers need to do themselves to keep up with the pace of change, the user growth? I think things like product innovation, spreads, trust, client satisfaction, all these factors. What is it that the various factors that you think, based on the user experience, that is going to win you the award in 2023?
Well, of course, I mean, our growth has been substantial and it obviously has been a banner year for TradingView. 2023, we'll see how fast the markets turn around, or if we can continue to have kind of choppy motion. Obviously, user growth will be somewhat reflective of that. In terms of the end of 2023, it's very hard to tell from my perspective in terms of who's going to be the next big winner, due to the fact that we have a lot of other folks coming on board as well. But really, I would say, what is considered to be unprecedented territory is the ability of a single broker to launch multiple asset classes on TradingView and, to offer more securities, more products, more, whether it's crypto, whether it's futures, whether it's CFDs or FX. Brokers really want to kind of adopt this, multi-asset model, specifically because they know that, if I'm a trader in Japan versus a trader in Australia, there's a ton of variation in what I want to trade. And, crypto is big in some markets and doesn't exist in others. And so really people realize that TradingView is a global platform. And so if we have so many customers, why can't I tap this market in Brazil versus this market in Malaysia? And so a lot of the focus, I think, in terms of 2023 is going to be on, how can I trade more diverse assets? And of course, the most important thing is that you actually keep customer service at 100%. And broadly speaking, continue to do what you guys are doing. I mean, overall, like I said, I think that Pepperstone's response rate is bar none in terms of what we saw versus the other brokers, and that's a huge, win for you guys. But in terms of now, you got to put up double the numbers you did last year, right, in order to continue that growth trend. I mean, you said like the momentum thing is big for TradingView. So we definitely think the same will go for a lot of the big brokers in the space as well.
I want to talk innovation because this is things that really excite me and you've got to keep ahead of the game. So I just take case in point. So we're streaming this in TradingView Streams, which has been taken out of the beta stage. We did it last week. We've got some really good numbers there. So that's a really exciting development for me, and I'm going to sort of be looking to do more webinars and streams through there as well. You've got over 100,000 custom indicators. You've got candlestick recognition. The community evolves all the time. Knowledge is improving. People are getting an edge in some capacities through that. So talk to me about short term. I'm talking about the next year or so, in the next 12 months, in terms of the management and your Exco team, in terms of the innovation that traders are going to benefit from. What really excites you?
Well, I mean, I think that, so we have obviously a ton of plans that I can't disclose, but what I can tell you and what we're happy to share with the Pepperstone team is, of course, continuing to expand the relationships that we've built so far in more strategic ways. So I think, in the next few months, you'll see a much tighter kind of integration with Pepperstone as we, try to introduce more customers as well as kind of offer more products and services to those customers that already use Pepperstone. So I think there's a ton of innovation coming specifically around the broker integrations we have today. In terms of the product overall, what we've really been working on recently is the integration of more news feeds and more information. And obviously traders need this. And basically for many traders, news is their lifeblood, right? You die by the tick or really kind of the latest release from the FOMC. I mean, a minute's difference makes a ton for a trader. So we're trying to pull in more content sets. That's going to be a big focus of us in the next couple of months.
Wow.
And we're also trying to diversify what we do on the social side of things. So streams is going to be huge for us, but in addition to that, we're launching a lot around kind of high frequency chat. And historically speaking, we've had some kind of direct message chats, but we're actually thinking about more message board style. So, you want to kind of join a community of thousands of folks talking about Apple or talking about, the dollar trade. We feel like we can make more open networks where people can actually share this information and, kind of have a more high frequency kind of chatter back and forth. And it's a little bit of
it can be a lonely life as a trader, right? You want to share your experiences with people.
Exactly that. And broadly speaking, I mean, I used to work at a company called StockTwits. We did this quite well. I do understand kind of the need for traders to, have, compadres, if you will, in the good times and the bad times. And so, no, it's super important for us to make sure that traders are connected, and that's going to be a big one for us. So
one quick one.
I think those are the big things. Yeah.
One before I let you go. And obviously you can't reveal your secret source that you may be putting some dev work into, but I'm looking at some of the developments on AI at the moment. ChatGPT is the buzzword at the moment, and I'm looking at things like I'm putting coding into ChatGPT to say, right, give me a systematic strategy. I don't know how to do Pine code, Pine editor. I don't know the coding for that, but I don't need to. I can plug it into ChatGPT and it spits out the code for me, and then I can use that to write a systematic trading strategy in TradingView. So that's something that I think is going to have absolute legs. What excites you over the next 5 years? Is there something, if you look through your Crosby your crystal ball and say this is going to be huge and it's going to influence our business on the tech side? What one thing stands out?
Yeah, I mean, I'll say that the crystal ball, the old Crosby crystal ball, is pretty blurry these days. I haven't seen much in terms of a long-term forecast. I mean, the Chat GPT stuff is very interesting. I actually thought it was kind of nonsense when I initially saw on LinkedIn this guy was creating a strategy using PineScript and doing a full backtest on the platform. At first, I thought this has got to be a scam, and so I actually followed and I looked at his profile. Turns out that he is actually inputting, I guess, the core code base of PineScript, which is on the open web. So ChatGPT can actually read the entire taxonomy and library and how PineScript is actually functioning as a code base. So if PineScript already, ChatGPT already knows how to use PineScript, then ultimately you just got to ask it questions. And so, I mean, that is a huge frontier, I think. Honestly, I would love in 3 to 5 years, I can just tell ChatGPT to make me some money and ultimately just sit back and.
So what's the trade then? Are we short programmers? Are we shorting programmers who do this professionally and going along TradingView PineScript? Automated trading strategies.
Great trade. I think in terms of we still need our developers to actually build the systems and engineers for the traders. But yeah, wow, if we can really start coding things in ChatGPT, like maybe I just fire everybody and take over the whole thing myself.
Well, let's hope not.
Yeah.
All right, I'm gonna wrap it up. I'm gonna wrap it up there. So great interview, some great insights from Pierce, and it's really good that obviously that people are seeing the integration between Pepperstone and TradingView working really well, and they're getting great utility and finding an edge where they can as well. So thanks for your time, Pierce. I'm going to Blake back into the program, but we're going to go into play of the day. Right, this is a bit of a contentious one, Blake. We're going to bring back in. Welcome back, my good sir. I want to look at a pairs trade, so long-short strategy. I love doing this world. I'm concerned about the NASDAQ. I mean, obviously it comes with risks. We know the risks, and they are that, we've seen Microsoft obviously saying something in the earnings call, but next week through this week we've got IBM, Intel, we've got the plethora next week. We've got Apple, Amazon, all these kind of names, Meta. Being long NASDAQ obviously comes with risk. And I want to offset that by being short the FTSE against that. The FTSE is obviously coming basically near its all-time high, so we're seeing a little bit of underperformance recently, and that's starting to show some weakness relative to the US markets. But most importantly, if you look at this as a ratio, so what we do is we go in the equation and we look at the outperformance of one market relative to another. Now, I haven't currency converted this, but you can see the NASDAQ is showing dominance against the FTSE. I think that a little bit of weakness in this ratio, I'd be looking to express this by going long NASDAQ and short the FTSE as a pairs trade, currency adjusted there. I want to wait for a little bit of a pullback in this situation, but I think I'll get that, and then I'll be looking to express this. I think that the NASDAQ's going to go on to outperform the FTSE is the bottom line there.
All right, well, I'm not going to be quite as tricky as you, Chris, but my play of the day is going to be the Euro Aussie. Matter of fact, while you put me in the box because of the yellow card for saying Kawedgie, I actually got long some Euro Aussie because Australia CPI numbers just came out. So as you and Pierce were chatting it up, I was actually getting long some Euro Aussie as a result. We came right down to support. I don't know where our chart's at, Chris, but it'll come up here in just a second. But as it came down to support there, I picked it up right off of that support level. What was
the number? What was the number? You're keeping me in suspense here.
Well, let me see if I can get you the data. We came in at monthly CPI came in 8.4% actual versus expectation, 7.6%. Now remember that was December. 1.9 over 1.6 expected quarter over quarter. So some big numbers, but remember that was then. That's not today. So today, I'm buying some Euro Aussie ahead of the ECB next week, which I think is going to be more of a bullish play as far as central banks go. So that's why I'm playing that Euro Aussie on the long side. I love that 38% retracement. The 38% retracement comes in right at 153.30, 153.40, depending on what feed you're using. But everybody should be using the Pepperstone feed when they're using TradingView anyway. And if you were, you know that we came within a whisker of that support. So I'm kind of buying the dip here ahead of next week's big ECB explosion.
Yeah, cool. I mean, I was on the short side of Aussie Swiss last week. It was wrong. We cut out the trade. You do, like my hair, you basically change it when you can. Aussie Kiwi's an interesting one. Have a look at the daily chart of that. That looks like it's got further legs to the upside there. So interesting one. We've got the RBA meeting, not next week, the week after. They're going to raise 25 basis points. But this CPI number, I'm guessing, would have seen interest rates further out the curve, moving to pricing a little bit more. Anyway, that's all we've got time for today. If you've stayed with us this far, thank you very much. Click the like button, leave a comment on some of the stuff that you've been seeing and hearing, whether it's about some of the market calls, market thematics, or whether it's about the Pepperstone TradingView partnership and how you're trading and finding utility. Great to hear all your comments. Blake and I love reading them. We'll see you more for next week.